Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we are going to learn the concept which is known as revenue reserves versus capital reserve. We are going to learn few differences of the same. So let's begin. Now see, reserves are one of the most and the most important or the notable appropriation of the profits. So companies create this reserve so that they can be ready to face any sort of contingencies in the near future. So reserves in a company can be divided into two broad categories. One which is known as your capital reserve, and another is called your second, which is known as your revenue reserve. Okay. So when we talk about revenue reserve is basically created from the net profit of company, which you are talking about. So basically, the net profit of the company is basically taken into account when we evaluate the revenue profit, and the revenue reserve also helps the companies to source, you can say, their capital from their internal profit. As an example, we can talk about retained earnings. Now, if you talk about capital reserve, on the other hand, is created out of the capital profit. Right. So the purpose of the capital reserve is to prepare the company for any sort of, again, contingencies or any unforeseen situation or any uncertain event, like, inflationary case, right? Inflationary situation in the company, or instability, or the company needs to expand and or to get, new urgent projects. As an example, we can talk about profit on the sale of, let's say, fixed assets. Then we have profit on the sale of shares. Just need to remove this and we can add over here as shares. So these are the two examples, from the capital reserves case. Well, let's start the differences between the revenue reserve and the capital reserve in a infographics fashion. Here we are, the revenue reserve versus the capital reserve. First, we are going to understand the meaning. The inherent meaning, as we have learned that, the first case, revenue reserve is basically created from the trading activities of the business, right? Trading means your operating activities. All those activities which are in operating in nature are your trading activities. Okay, let's say if you are into the business of making medicines, right? So all those incomes or expenses which are related to the medicine, let it be any segment of the business, but yes, related to the medicine, yes, it's trading activity. Over here, in case of the capital reserve, it is created from the non-trading activities of the business, like the sale of fixed assets or the sale of shares. So those are the activities that are included in the non-trading activities, which doesn't happen very frequently, and it happens uncertainly, or maybe in some contingent event, and it happens. So that's why it is non-trading activities. The application part, the revenue reserve, it acts as a reinvesting source for the business. Remember one thing: if company has, let's say, profits, what it is going to do is that they are either going to retain or they are going to pay as dividend, or they can do both. They can retain and pay dividend, depending upon the ratio the company is going for. So if they retain, then they have retention percentage. If they pay dividend, then they have a dividend percentage, that is a dividend payout ratio. So retaining means reinvesting the source. They may retain and utilize the same for investing into the business, for the expansion, or for any other capex related issue. In case of the capital reserves, it acts as a provision for future contingencies, as we discussed before. Like, in every country there is a problem of inflation, or maybe sometimes they go into depression sort of, or instability mode of the business. So in that scenario, it is very necessary to utilize some level of profits, which the sale of land, fixed assets, the amount which is transferred to the capital reserve, to be utilized for such certain or the unseen, unforeseen situations. So this is the application part, where exactly the funds are used in case of revenue reserve and in case of the cap. Now the distribution part. It can be distributed as the dividend, as we discussed, to the shareholders, depending on the discretion of the company, right? So basically over here, if the company, let's say, have 100 million in terms of profit, so the company, as in this in the third case, they are retaining as well as they are paying dividend. So let's say they are retaining 50% and they are paying dividend as 50%, right? So 50 50, as simple as that. and it is never distributed. Why? Because it's a restrictive reserve which is used for only specific contingencies and utilized for only specific situations when demanded. The term it is useful, the revenue reserve is useful for the short and the medium purposes, like short-term finances, medium-term working capital needs, or sometime basically that's a part of reinvesting your funds into the business. And the capital reserve is useful for the long-term purpose, as been declared that capital reserves are more useful in case of the situations which demands a real resilient force when there is a inflationary condition and so on and so forth. The monetary value. Revenue reserves can be received in terms of monetary value. See, remember one thing, the revenue reserves, they come out from where? They come out from the profit and loss account. So they are in monetary, I mean over here in cash terms. But when we talk about the capital reserve, it cannot always be received in the monetary value. It can be in terms of another asset, it can be in terms of barter, it could be anything. It is not always in terms of cash, and over here we always received in terms of cash or monetary value. What are the other purpose? In case of the revenue reserve, a portion is always reinvested. That is what we discussed, assuming that company may be retaining 50% of their profits to the company or distributed as a dividend. As the case, 50%, 50%, that's what we discussed in our example. And for this one, in case of capital reserve, it can be used only for the legal purpose or the specific purpose for which the capital reserve has been designed. An example is retained earnings. We know now very well, right? Because we are talking about over here the reserve, which is retention ratio, and everything is going to apply over here. And reserves created out of profit on the sale of fixed assets or the sale of shares and so on and so forth is going to be utilized in this particular scenario. So there are many differences between revenue reserve and capital reserve, but we'll try and make things really quick. Revenue reserve and capital reserve, for some few important differences, like the revenue reserve is created from the trading operating. We know that capital reserve is created from the non-operating activity. Revenue reserves can be distributed as a dividend to the shareholders, right? And a capital reserve, on the other hand, is used for the, you can say, for funding a company's project, on so on and so forth, right? And revenue reserve is useful for short medium term. The capital reserve is useful for the long term. Revenue reserves is useful for monetary, this is non-monetary, and the popular example that we learned. So in and all, we can finally conclude that revenue reserves and capital reserve, they are both used for some specific purposes, right? And revenue reserves, on the other hand, gets created so that the core of the business can be strengthened. Capital reserves, basically, on the other hand, serves many purposes, from writing off the capital losses to finance a new project to prepare provision of for future contingencies and so on and so. So revenue reserve is basically a reserve the shareholders basically can claim a share of, and the shareholders can ask for dividend, and if the entire amount of the net profit is plowed back to the business. So if a company can convince their shareholders that the reinvesting in the entire amount of the business will only generate better profits, then the issue is actually solved. But capital reserve cannot be shared as a dividend, and shareholders claim their share as well. So it is prepared just for the business to achieve the urgent or the long-term needs. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.